This conference will now be recorded.
Hey, good evening, Trade with Traders, Freedom Traders. It is your boy, Flex Trades. Hope everybody had a great day today. We had the big one for me today, obviously BABA. Got that significant anomalous gap up, trimmed into that, and sized down throughout the day. I'll talk about that trade going forward, obviously. But today there was much more than just that trade, right? We had a few other trades that we've been outlining that had some follow through. And really, for the most part, the market, and I mentioned this last evening, and it really felt like that today, but that euphoric type of atmosphere is settling in. And if you paid attention today, you kind of picked up on that. The meme stocks came back with a vengeance. AMC, GME, even some of the smaller names, HOOD, right? We had a lot of the meme stock money flow back. So to me, that's a telltale sign that the euphoric meter is getting close to off the charts. And so I'll break down broad market. I'll break down the trades I'm looking for tomorrow. Our time's valuable. I have a decent number on watch. So I'm going to try to keep it as short, sweet, to the point as possible. But just keep in mind the euphoric meter, when it gets up to this point, that's when I start sizing back a little bit and being a little more patient and cautious with my capital. Because the best thing at this point would be a washout or some kind of digestion. But with that being said, let's get right into it. As always, going to start off here with the broad market. SPY today, very narrow range. Again, new all-time high. We've now had 4 green days in a row since that washout last week. Same with broad tech. Okay, I'm not sounding the alarms or anything like that, but today's candlestick is an early indication of a top, a temporary top. So again, with what I just said, this type of chart, the meme stock money flow, all that type of that atmosphere that came to be in the last couple of days and developed slowly over the last couple of weeks, you felt it today. So cautious going forward. Best case scenario going forward is a pullback, some digestion, but just keep in mind these things are extended and there's some early indication of some tops being put in. So let's play it by ear, obviously, but scenario A is some digestion. Going forward into BABA, great trade. There's no other way to put it. The thesis was outlined from a couple days ago. Kept the losses very small, very small, very manageable. And believe it or not, I was never able to even get the size that I really wanted because of today's gap up. But that's okay because I still had a good enough size to make a good trade off this. Going into tomorrow, the 2 scenarios I have in mind really: gap up, I trim more, potentially the rest of the position. I'm not going to get greedy with it. And gap down, I'll probably cut at least half of what I have remaining and kind of reevaluate. But that big gap up today looms large, and there's a reason this has been as weak as it has been. If we gap down and there's obvious selling pressure, then I ditch it and I move on. The other side of that, it's so oversold that a sustainable bounce up toward 180 or 190 over the next several days or week or two also wouldn't surprise me. So again, for me, the main trade has been executed, and at this point going forward, size down, raise stops, and respect stops. And if you miss the bulk of the trade, that's okay. There's going to be more A+ opportunities down the road, but sizing back. Continuing on, Tesla. I outlined this one last evening. I mentioned how yesterday's candle kind of got away from me. I wanted to see a narrower range, smaller range, some digestion, and that's exactly what we saw today. So scenario A played out perfectly. Much of the same for me. A pullback down towards 690, 685, somewhere in that range. I still love the setup. I still think it's super constructive. So, my thoughts haven't really changed. I want to see some digestion. I want to see a pullback sub 700, wash potentially down towards 690, and, start scaling in that way. With that being said, if it does get up towards 720, especially towards 730, I want to have skin in the game, and I'm going to play that break because the multi-month inflection is going to be a big one that snaps, and I think there's going to be a quick 20 to 30 buck move. So again, the way I play that, I have the core position at intrinsic value, and then if we get to that key break, I scalp it with at the money contracts. But again, risk outlined, and my scenario A is out there. That's what I want to see, and if it doesn't play out that way, that's okay. I'm still going to make the trades that I just talked about. It's just not going to be the ideal size. Going forward, NVIDIA and AMD, I'm going to kind of tie them together a little bit. Again, I outlined these guys yesterday. I said, I want to see a pullback. I want to see some digestion. We had a huge move. This needs to take a little bit of a breather, and it did exactly that today. Narrow range up here at all-time highs, an inside candlestick. Obviously, if we get up toward 220 break again, wouldn't be shocked if we have some follow through toward 230 or so, but that's not the trade I'm looking to take. The trade that I'm looking to take is if this washes down toward 210, 205, something like that, then I scale in intrinsic and keep my risk down toward low 200s. So something similar with AMD, but I outlined this a little bit yesterday, but we kind of have this this pennant forming here. So we had the huge move post earnings, huge move, and now we're just kind of chopping up sideways downwards in this channel here. So again, I'm looking for this trend to continue, and then the big break at this point is going to be, the big break is 112.5, but 110 is also a break worth watching in my opinion. So I'm not, I might scale in a little starter intrinsic value, keep my risk, like I said yesterday, right around 106, 105 and a half. I don't want to see it lose that level, because then the ideal look that I'm eyeing kind of loses itself a little bit. But 110 and 112 and a half, big levels for the potential for a trade back toward all-time highs. But again, I'm patient with it the same way I'm patient with NVIDIA, the same way I'm patient with Tesla. And that's something that I preach a lot, that I talk about a lot. I outline it in my scenarios often, how patient I am. And if I don't get the trade that I'm looking for, there's always a chance I still take a trade in it, but it's not going to be a significant type of size or anything of that nature. So just keep that in mind. When I talk about these scenarios, that's what I want to see. Those are the scenarios where, I can start scaling in a little bit better size. And if it doesn't work out that way, so what? There's always going to be another trade opportunity. Continuing on now, I'm going to kind of tie these together, AMC and GME. AMC had a volume that supported today's candlestick. GME, on the other hand, did not. So that's something to note. GME's volume, while it is an anomaly, relatively speaking, right? I mean, if you look at the volume for the vast majority of the last couple months, it is an anomaly. However, I don't think that it's really enough to support the move. I'm not suggesting shorting pops or anything of that nature. In fact, I do think, if this washes back out toward sub 200, down toward 190, 185, something like that, I'll look to scale in for a long. Same type of deal with AMC. It's hard to imagine that this just gaps up and breaks 50 and gets back toward 55. Again, that's sort of my own bias, obviously, playing into that. But that's, the way I'm visualizing it, I think the scenario that's much more likely to happen is perhaps a small gap up, but more likely, a break even open and then a washout. And something like AMC, I would love to see a wash toward 40, even under 40. If we can get into the 39s, that would be awesome. I would scale in appropriately, keep my risk manageable. Going forward, I don't really want to see 39, 30, 38. 38, 38 and a half. I want to see that hold. So again, any wash toward 40, I scale in and I keep my risk right there around 38 and a half or so. But obviously a beautiful candlestick. I'm focusing on AMC because again, GME volume didn't really support the move today. That's okay. I'm sure there were plenty of trade opportunities to be had, and that's awesome. AMC, on the other hand, volume supported it a little bit more, and I like the chart setup a bit more. So again, wash toward 40, sub 40, that for me is an opportunity to scale back in and potentially make a long bounce trade on. But obviously today's high is going to be the spot moving forward, right there around $48. $48, $50, those are big time breaks. But I think it needs a little bit of time to digest today's move before going forward. Continuing on now, DLPN, awesome move today, guys. I outlined this last evening. It's been on my radar for a couple of weeks. I just felt like it was finally the time to mention it, and I'm glad I did because today had a real nice move, upwards of 25% from yesterday's close to today's high day. So awesome move, plenty of liquidity. 7 million shares, almost 8 million shares traded. Just an awesome move. I sold the majority of my position. Now I'm just kind of patient, see how it reacts. Obviously I keep a little bit of skin in the game just for the off chance that it has a crazy gap up or something. Again, never rely on a gap up. That's stupid. That's not really trading. However, if I have a profit, if I'm working with a profitable position, and I've trimmed, taken profits, and I'm down to 1/4 or 1/5 of my size, yeah, I'm going to keep skin in the game with a chart like this. But with that being said, the volume really not supportive of a inflection breakout right now. So going forward, I want to see some digestion, a couple inside days, maybe a pullback toward 11, potentially. I don't really want to see it lose 11. I think it would look weak if it lost 11. So ideally, it holds $11 or so. But yeah, at this point, my risk with my remaining position, and if I scale in on a wash, it's going to be right there around $11 or so. But if we're ignoring volume, today's candlestick was awesome. It was a nice clean break, pullback, and but obviously we do pay attention to volume here. I know I do, so it's just something to consider. Volume not really supportive of today's move, but that's all right. A 25% move is a 25% move, and there was plenty of liquidity to make that trade. So again, risk defined, and going forward, obviously I've scaled out and working with a profitable position. SHIP, last one we're going to talk about here. I've been watching this for, it's been on my main watch list for months now. It's one of those that I've kind of had in the back of my head, just thinking, okay, if this can creep back up toward 130, 140, those spots are big. These are big spots we're talking about here. And I'm gonna draw this line here right around 140. And again, this more near term resistance supply right around 130. And then this trend line that we've been riding along for months now. So you see we're kind of coiling up into that 120, 130, 140 break. So for me, and I'm gonna pull the chart back even further in a moment, but for me, it's becoming a really, really mouth-watering asymmetric type of opportunity here. And part of that has to do with looking back in time. You see, huge multi-year washout down toward last winter's lows down there in the 40, 50, 60 cent range. Then we had a nice move up toward $2.50. And now we've spent essentially the entire year trading in this channel. This is one of those charts, multi-year reversal setting up. My risk is going to be down there around $1. So I have about a 18, 20 cent downside risk. This is one of those charts where If this breaks 140, I see this speeding up toward $2 pretty quick. And then at that point, if it digests a little bit more, I see no reason that this can't retest 250 and then eventually crawl back up toward that $5 mark somewhere down the road. This is very much a, build a position on washouts type of trade and keep my risk very defined right there around the dollar mark. But I know there's things going behind the scenes within the sector and there's fundamentals at play here. I don't really care about all that. Why I've had it on my main watch list for as long as I have is because I've been visualizing this type of multi-month digestion, and I've been waiting very patiently for subtle hints of inflection retesting. But that being said, I think it's time to put on people's radar. It's time to talk about it. It's time to build a position for me personally. And again, 130, 140, those are the big breaks. So about a 20 cent downside risk for me with the potential of, $1, $2, $3 upside potential, depending on, if this trade thesis works out the way I'm kind of visualizing in my head. But it's a very good asymmetric trade thesis, in my personal opinion. And with that being said, that wraps up the watch list. Again, don't be greedy. The market euphoric meter is getting toward off the charts. Just keep that in mind. I know there's some fundamental stuff going on toward the end of this week. Again, not really paying attention to that stuff. All I can tell you is charts are extended, euphoria is high. There's been a lot of moves over the last couple of weeks. So just kind of, watch your back, be cautious, size down if you feel like it's appropriate. I know I'm going to be, but these ideas are still valid, and I'm going to be looking for these scenarios that I've outlined to play out. All right, guys, that's it. Hope everybody has a great Wednesday. As always, I will post any new ideas that pop up on radar. That's all. Peace and love, guys.